And now let's head on to our first conversation. It's the commodities market update, and we see wheat edged higher, recouping losses from last session. Let's talk to Dr. Desola Sumoni, now analyst at Financial Derivatives Company. Join us via Zoom. Great to have you, and Happy New Year.
Happy New Year to you, to Lydia, and great to thank you for having me on the show.
Yeah, so is the 2022 wheat drama over and, likely not to continue in 2023?
The short answer to that question is no, because there are a host of factors that drove the drama in, as it calls it, in the wheat market, the volatility in the wheat market last year. And many of these factors still persist. One of them is the Russia-Ukraine war. And although there's the agreement to allow exports in the Black Sea area, that is a kind of a fragile equilibrium, because if there's an escalation in the conflict, then we'll see exports from both Ukraine and Russia are reduced, and that will also push wheat prices northwards. Other factors include weather-related issues. So the weather is still a big issue for commodities such as wheat, for example. Currently in the South American region, in I think Argentina or Brazil, we are seeing some drought, which has affected wheat harvest in those areas. On the other side, in Australia, we are seeing bumper harvest because of good weather conditions, good rains, which has kind of offset the drought coming out of South America. So those two factors. And the third factor is this uncertain economic outlook, right? Because now the world is headed towards a recession, particularly because we are likely to see more interest rate hikes in developed countries, in developed economies going forward. And that has an impact on, first of all, the dollar, but also it's going to drag global economic activity. And that's also going to put a drag on demand for commodities. So all of these factors are likely to persist this year. Particularly, I think the most risk factor is the Ukraine-Russia war and potential escalation in that.
And obviously, we saw most commodities, hit new highs in 2022, but they've all, trended downwards, from those highs. Even the US dollar, that's also, trended downward. Is it possible we're out of the woods?
Good question, Lali. This time last year, let me just give a little bit of throwback. This time last year, when everyone was having their outlook for the year, right? No one knew that Russia was going to invade Ukraine, right? And that came and just all the bets were off the table. So, I mean, at the moment, it seems as if, first of all, the Ukraine-Russia is not the Ukraine-Russia war is not over yet. We are still seeing some. I mean, I think there was a kind of a cool down from Russia going to the Orthodox Christmas celebration, but there's still, the tensions are not over yet, and because of that, any escalation of those tensions would have like a ripple effect on the global market, including the commodities market, the stock market, all the markets. So I don't think we're out of the woods yet. Hopefully, I'm hoping that, this war, which has persisted for about 11 months now, I think it will, we hope that, it can be resolved quickly so that we can move on from that.
Yeah, we did get some good news from the FAO. The Global Food Price Index has continued to drop, to December. That's the 9th, consecutive monthly decline. That's good news.
Indeed, it is positive, like you mentioned, this index, which is was created by the UN Food and Agricultural Organization. It's a basket of around 5 food groups, which include cereals, dairy products, sugar, meats, and I think vegetable oils. And that has declined consistently for 9 months, which is good, particularly for food insecurity in many parts of the world. Like you mentioned, stronger dollar, in addition to record high food prices, meant that a significant portion of the world's population were food insecure. Right, but with the fact that it has been declining consistently, it is positive. It's one, to reduce the import bill for many of these food importing countries. 2, it can also help significant portion of the world population out of poverty, at least food poverty. However, it's important to note that despite the fact that this index has been declining consistently for the past 9 months, it is still at record highs, and potential escalation in Ukraine-Russia war would potential escalation in the Ukraine-Russia war could change the trajectory. Hopefully, we do not see that.
And let's look at inflation. Obviously, we've got some forecasts for inflation data coming for December. So what are you seeing for Nigeria with that data?
So currently inflation in Nigeria, I think, is around 21%, larger 21 points, I think 3-something%. Again, what we need to look at is the drivers of the inflation, right? One of the key drivers is imported inflation, owing from, first of all, higher prices, higher global prices. But secondly is the exchange rate weakness. The exchange rates, we still have the exchange rate still a little bit volatile, but it's still relatively high. So I think with the fact that food prices, particularly wheat prices, are kind of coming down slowly with a relatively a stronger exchange rate, I think that's positive for inflation. But also, if you look at domestic production, look at how the rains that we had a couple of months ago, how the impact that had on the harvest. Currently, we are also seeing, for instance, Nigerian Cocoa Association of Nigeria forecast lower production of cocoa because of adverse weather conditions, excessive rains in particular. So I think all of these factors are still going to play into inflation numbers in Nigeria.
And obviously, we're still seeing, some volatility in the oil market, but prices, trending up today. What's driving sentiment there?
So this week, I think we've seen a little bit of volatility in the oil market. One, we saw over the weekend, China opened up its borders for the first time in 3 years. And that was positive because it was greeted with optimism in the market, because, we are now expected to see more demand from China, because China is the largest importer of oil in the world and the second largest user of oil. So with them opening up the economy, we are seeing, on one hand, we are seeing more economic activity, we are seeing more travel, we are seeing more demand for oil. On the other hand, we are also seeing more cases. If you look at what's happening in the health sector, a lot of the hospitals are overwhelmed with people sick with COVID. So anyway, the opening of China was greeted with optimism, and that was positive for oil prices. However, yesterday, some US Fed officials struck a hawkish note, citing that the benchmark interest rate would need to increase above 5%, up from the current 4.25 to 4.5%, and that, I think, spooked the market a bit, which signaled that this is going to drag economic activity, and that's going to have a negative impact on oil demand. I think that is what is driving oil prices downward at this moment. Those two factors. It seems as if the fact that we are going to see more hikes in interest rates, or a higher than expected hike in interest rates for 2023, I think that was a huge drag on sentiment, and that is why we are seeing oil prices trend downwards at this time.
And Desola, I want you to check your crystal ball now. It's 2023. What are you seeing for commodity prices, at the end of 2023? Do you think somehow, these prices might start going up again? Like gold has had some action, from 2022. Gold has rallied about $1,800, per ounce. And it's been a silent move, I must say. So what are you seeing for 2023?
Let me start with where you stop. Gold, right? Gold is a safe haven asset, and with all the volatility that we saw in the commodities market last year in the global economy, it was not surprising that many investors put their money in gold. Just there was a risk off sentiment in the global economy, the global market, and that's why we saw a rally towards safe haven assets such as gold, and that's why you saw gold price rally upwards. People who put their money in gold last year, I think they'll make a killing at the moment. Now, talking about other commodities, Ladi, I think it is very, very difficult to forecast how it will play out, because it's going to be dependent on a number of factors. For commodities, three main factors are going to drive the commodities market this year. One is escalation or de-escalation of the Ukraine-Russia war. That's one. I mean, talking about the Ukraine-Russia war, even though we know that there's this agreement in the Black Sea about Ukraine exports, data shows that exports from Ukraine are still lower, significantly lower than pre-war levels. So that is on one hand. Two would be weather conditions, whether adverse weather conditions or favorable weather conditions. Those two factors are going to affect commodities, the commodities market this year. And finally, the economic outlook. Right, last year, the last meeting from the Fed, the news or the gist of the conversation was that, okay, we're still going to see smaller increases in interest rates this year, right? And so markets forecast maybe 2.5% increases here and there, smaller pace of increases. But now, with what happened yesterday with two senior Fed officials striking hawkish notes, saying that we're likely to see interest rates end the year around in the range of 5% to 5.25%, which is higher than what the market has expected. So we think that higher interest rates in the US, particularly also in England and the ECB, would kind of drag what's the word now? We put a drag on economic activity globally. We may see the global economy go into a recession, and that would also strengthen the US dollar and weigh heavily on commodity prices. So these are the three factors that are going to drive the commodities market this year, Ladi.
And talking about a strong US dollar, obviously consensus now is there's a possibility the dollar has peaked against the basket of commodities, about other currencies, that's the DXY. So bringing it down home, the Naira, obviously we're seeing flat movement that market. What are your expectations for the Naira? Any possibility of strengthening?
Okay, let me talk about the DXY. Like you mentioned, the DXY, I looked at the graph this morning. DXY had peaked, I think, Q3 last year, due to mainly, the rapid pace of increases in interest rates. And, there are still some analysts expect that we're still going to see trending upwards later this year. Well, I think that the Naira would enjoy some respite this year for a host of reasons. But I think that I think that the Naira is going to strengthen a little bit this year. All other things being equal, I think that the Naira is going to strengthen a bit this year. At least we got to record lows last year. I don't think we're going to go lower than the rates we saw last year, where we saw the Naira almost reaching, I think, 1,000 Naira to the pound. I don't think we're going to see that this year. I think the worst is over. I think the Naira is going to strengthen this year. How strong the Naira is going to go would, depend on a host of factors. One already we are seeing what it will depend on level of interest rates globally. We are seeing higher interest rates globally, so that's going to affect the Naira. Two, also depend on the kind of policies we're going to see in Nigeria. But note that we are going to have a change of administration very soon, so that might also play a role in the strengthening of the Naira in the coming days. Yeah,
it'd be great to see how all of that plays out. But what are you seeing for domestic commodity prices?
So at the moment, Ladi, we are seeing a mixed basket. On one hand, we are seeing prices trend downwards. If you look at the price of Gari, it's down 77% to 13,000 Naira. If you look at the price of tomatoes, the basket of tomatoes is also down around 12% to 22,000 Naira. Mainly because some of these commodities are down mainly because of harvest season. Also, I think there's a kind of more supply related to demand. I think a lot of there was a stock up in anticipation of the Utah season, and that season is now over. So we have huge stock and huge supply relative to demand. So that's why we are seeing some prices trend downwards. On the other hand, we are still seeing some imports dependent or import elastic commodities trend upwards. If you look at the price of flour, is up significantly to 34,000 Naira, because we're also seeing this is tracking the higher prices, global prices of wheat. The higher prices of wheat in the global market, And if you look at the price of tomatoes, that's actually up significantly by 41% to 65,000. I think part of it could be weather conditions. Excessive rain affected the harvest of tomatoes, which affected the domestic supply. Another reason could be issues around insecurity. We are seeing a little bit of pockets of unrest here and there, which I think affects the supply of tomatoes from the north, from the middle belt of the north coming down south. So these are the factors driving domestic commodities market at the moment, Ladi.
Yeah, quite a mixed bag, in that market. But thank you so much, Dr. Adesola Sumoni, analyst, financial derivatives company. It was great having your perspective today. Thank you.
Thank you.
All right, we're talking commodities there, but now we'll take a break. When we come back, we're looking at Nigeria's construction industry, get a review of 2022 and what to expect in 2023. That's our next conversation. To stay with us.